Hello friends and welcome back. So far we have seen types of candlesticks body I have explained you, and what each and every type of candlestick signifies, that also we have seen. Okay, in this part I am going to teach you candlestick patterns. Okay, so far we have seen a single candlestick body types, right? So in this part I'll be teaching you what happens when we combine a pattern of two candlestick bodies. So 1 and 2, when two candlesticks are combined, they form a pattern, and what are the types of patterns and what each pattern signifies. Okay, that we are going to study. So first type of candlestick pattern that we are going to see in this part is bullish engulfing candlestick pattern. Okay, so in this type of candlestick pattern, usually what happens is you will see two type of candlestick, and the first candlestick should be smaller than the second candlestick, and the second candlestick should engulf the first candlestick. Okay, so here you can see the size of green color body is above the body of a smaller the initial candlestick. So we can say that the second candlestick is engulfing the first candlestick, and this type of candlestick pattern is called engulfing bullish candle pattern if the second candlestick is green in color. Okay, so we can see red candlestick, the first red candlestick is engulfed by the green candlestick, so this will be bullish engulfing pattern. So what it signifies is, whenever you are going to see a bearish trend, so suppose market is continuously falling on that specific time frame and suddenly you see a bullish engulfing candlestick pattern like this, then consider that market might reverse from here. Okay, so there are chances that bulls are now taking the control. See, initially who were in control? Bears were dominating the market. So now bulls might dominate the market since they have shown a very strong sign of engulfing pattern. So now bulls might take the charge from here and take the market upside. Okay, so this is what this pattern signifies, and the condition for bullish engulfing pattern is the pattern should look like this and should come after a downtrend. Okay, so once the downtrend is over, and if we once the downtrend is there, and if we see a bullish engulfing pattern, so the position of this candlestick pattern is important. Usually it signifies the reversal, so it should be at the bottom of the pattern. Okay, of a trend we can say. So it should come after a downtrend. That is the only condition for this type of pattern. So here you can see we are continuously in the downtrend. Okay, so market was moving, bears were dominating, bulls tried a bit but they couldn't take the market on the upside. So again market started moving downside, but see, once you see a bullish engulfing pattern, so this is a bullish engulfing pattern. Okay, a green candlestick is engulfing the second candle, and see how strongly the market reversed from here. Okay, then the bears tried to take the control, but again bulls formed a bullish engulfing pattern and they again moved the market upside. See how strongly the candles are coming. This one is strong candle, this one is strong. These are all strong candles. Okay, so that is why market is continuously moving upside, and we can say bulls are in charge of the market. Okay, so a bullish engulfing pattern should look like this, and it should come after a downtrend. Okay, so this is the only condition. Now second type of candlestick pattern is bearish engulfing pattern. What happens is, in this type of candlestick pattern, the first should be a green color candle, and second should be a red color candle, and it should engulf the first candle. Okay, the second candle should engulf the first candle. So that is the only condition, and one more condition is there. It should come after an uptrend. Okay, so suppose we are in an uptrend, continuously in an uptrend, and once we see a bearish engulfing pattern, the market, there are chances that market might move down from here, and bears are taking the charge of the market. Okay, so that is why this pattern is important to see the bearish reversal whenever a bullish trend is there, and if we see a engulfing, bearish engulfing, we can say that bears might enter from here and they might take the charge. Okay, now this is the only condition. It should come after an uptrend, and it is a bullish trend reversal pattern. Okay, so from this pattern, a bullish trend ends and a bear trend starts. Okay, so let's see how it looks on the charts. See, here we have a strong bearish engulfing pattern. See how strong it is, right? First candle is engulfed by the second candle, and it is red in color. Okay, and it came after an uptrend. So we can say this is a valid pattern, and market show the reversal sign and bears took the charge. So we can call it as a bearish engulfing pattern, and it is strongly signifying a bearish reversal from here. Okay, so here you can see this one is also a bearish engulfing. So first candle is engulfed by the second candle, and here also it is a bearish engulfing. So whenever market is falling, against bull try to take the control, but bears again make a strong move, and again market start moving down from here. Okay, so this is how this pattern works and it looks on the charts. So remember this pattern. Here also you can see one bullish engulfing pattern. See, you can see two candles. So this is also bullish engulfing pattern. This is bearish engulfing pattern, and see their location. It came at the top, and this came at the bottom. We won't call it at the bottom, but it came after the correction of a small bear run we can see, and then a reversal happened from here. So this is how these patterns work on the actual charts. Okay, then this is the next type, tweezer top pattern. Okay, you know tweezer, so everyone must have used tweezer at their home. Okay, so this is how a tweezer look like the two tongs. That is why the pattern looks like that, and it is given a name tweezer top. Okay, so the first condition is that we have a wick on the candle on the top side. Okay, here you can see we have one wick, and here we have a second wick. Okay, so condition is that the wicks at least should have same height, or they should start at the same point. Okay, so then this pattern is very strong as a reversal pattern. Okay, in crypto market, many times it might be like this wick is bigger than this wick. So usually it doesn't matter. The position and this type of body is important. Okay, so body shape is also important. There should be wicks on the top, parallel wicks we can say, and body should be also be there, that should be parallel at the downside. Okay, so this body might be bigger, this body might be small, but usually first body should be small than the second one. Okay, so take care of that, and usually we'll see this pattern at the top of a trend. Okay, so suppose we are in an uptrend, continuously market is moving in an uptrend, and then you see a tweezer top pattern, then consider that there are chances that market might go down from here. Okay, so these are the two conditions of this tweezer top pattern. Okay, and this signifies the bullish trend reversal. So this could be the end of the bullish trend and start of a bear trend from here. Okay, so let's see on the charts how it looks like. See, I told you, right, the wicks are sometimes bigger and sometimes smaller. So here you can see a tweezer top pattern. Usually they are parallel candles, and wicks are on the top side, so we can consider that this is a tweezer top candlestick pattern. Okay, here also we saw a tweezer top candlestick pattern. This is a bit small one, but see how efficiently it works. These are two candlesticks and these are two bodies, and they work properly in this on this type of pattern. Okay, so this is how it looks like. You won't see a perfect pattern like this always in the market. So there is always some minor changes in the wicks size, but usually observe the body should be at least like parallel, and it should be engulfing each other. So it is very strong sign in that case. Then the next type is tweezer bottom candlestick pattern. Okay, this is just like opposite of tweezer top. Whenever market is in downtrend and we see such type of candlestick pattern, market will start moving up from here. That is the consideration. Okay, so the pattern looks like this. There are wicks at the bottom, and the two parallel bodies are there. Bodies should be parallel to each other, and these wicks might be smaller or longer, so it doesn't matter, but body should be like this, and it should be at least a bit engulfing. Okay, so we can say that this could be the end of the bear trend, and market might see an uptrend from here once we see a tweezer bottom pattern. Okay, so these are the two conditions, and one condition we saw that it should come after and downtrend, so that is important. These are usually formed after and downtrend. Okay, so this is the end of the downtrend we can say. So let's see how it looks on the charts. Here we can see this is a tweezer bottom. Okay, so you see two tweezers at the bottom. Size of the tweezer might be small or might be big, but see body, how parallel body is formed, and market will reverse from here. So it doesn't mean that market will completely reverse and make a new high. It is not like that. There are chances that market will make a reversal. It could be a small reversal also. So see how market went up, but it made a small reversal. It didn't touch this resistance. Okay, it went to a small height and then it came back and again we made a bullish engulfing pattern, and then market started moving up from here. Okay, so this is how these patterns look like on the chart. So let's try to find multiple patterns here. So here you see a tweezer bottom pattern. Here I see an engulfing candle, right? Engulfing, bullish engulfing candle I see. Here I can see a bearish engulfing pattern. Then here we can see a tweezer top, right? These are tweezer top patterns. Then we have what else we have? Here we have a bearish engulfing pattern at the top, and this might be confusing candlestick pattern, but usually it should not appear like this. Many times in crypto there are manipulations, as you know, minor manipulations are there, but in stock market and forex market you will see the exact candlestick and how these are formed. Okay, so consider these types of patterns that are very important. Now there are some few more patterns are there, but usually I don't see them appearing in our crypto market, but as a trader it's my duty to teach you those patterns, and in case you are going to trade in some other markets, so this information will help you. Okay, so next is bullish Harami pattern, okay, or we can call it a pregnant pattern. So it is just like a big body is there and a small body is inside the big body. Okay, so usually this signifies the reversal of a trend. So if you are in a downtrend and if you see a bullish Harami pattern at the bottom, there are chances that market might go up from here. Okay, so this is how the pattern looks like. We won't see in the crypto market, usually this pattern is not visible, so I might not be able to show you on the charts. So that is why you just remember the pattern, and in case in the future, if sometime when the crypto market will be more mature and more higher volume trading will be there, so we might be able to see these kind of patterns also. But in stock market and forex market you will see these type of patterns. Okay, so it should come after an downtrend, same, it should come after an downtrend, and this usually signifies the bearish trend reversal. Okay, so this is called a bullish Harami or pregnant pattern, we can say. Then this is the bearish Harami pattern, just like opposite of bullish Harami, and it should come after an uptrend, and it shows the reversal, the bullish reversal it shows, and there are chances that market might go down from here. So it is just like bearish Harami, initial candle is green in color, and a small pregnant candle, we can say a small candle is there just inside the bigger candle, and this is the sign that market might reverse from here. Okay, so this is also called an inside candle pattern. Okay, so you remember this name, you will see, you will observe this type of candlesticks in the stock market. So this is called an inside candle pattern. Okay, crypto also not 100%, but we can say 10-20% of times we see this type of candlestick on some charts. Okay, so this is how it works, it is an inside candle, so we can say market might reverse from here. Okay, and bearish Harami, now you know. Now this is another type, three black crows pattern. Okay, so usually how it forms is three candlesticks come after one another. Okay, and another significance is that it should come after an uptrend. Okay, so once we see this type of candlestick, we may see a bigger reversal from here, and market might, usually when you see a dump in the market, in crypto market, this type of candlesticks you will see a small candle is there initially, then it forms a big candle, then it forms a big candle, and like this this pattern looks like it is called a three black crows pattern. Okay, so it won't be like 100% the shapes would be like this, but usually it is like appears like this, means three consecutive candlesticks you will see. Okay, and it should come after an uptrend. Okay, so you will see the only one condition is there. At the top side you will see a what we call it a hammer candle. Okay, so it is not a green hammer, it is a red hammer. So usually we can see this kind of hammer candlestick initiate the dump of the market, then we see a bigger body, and then we see this kind of Marubozu kind of body, where it signifies a very strong reversal or very strong dominance of the bears in the market. Okay, so this is how it appears, three black crows pattern we call it. Now this is another type, three white soldiers. So it is just like the opposite of it. It should appear after a downtrend, it should come after a downtrend, and usually see you will see a spinning top, initially a spinning top type of candlestick is formed, then a very strong bullish engulfing kind of Marubozu type of candlestick is formed, then again a Marubozu candlestick type of candle is formed. Then you consider that the trend is very strong, and we may see a good highs from here. Okay, market, there are chances that market will make good highs from here. Okay, so remember this pattern, 3 white soldiers pattern. Okay, so these are the type of candlestick pattern in which we combine 2 or more than 2 candlesticks and we try to find a pattern in that. And usually I've shown you the important type of candlestick pattern. You see, there are many means we can say hundreds of multiple candlestick patterns. Okay, but usually what I've seen in the market and what I've learned in the books, so important ones I have included in this course, and whatever I've taught you, those are the important ones, and we actually see them in the crypto market. Okay, that's why I've included in this course. So this is very important chapter, and you should remember these patterns, and you will always see those patterns on the chart. It is not like all the chart patterns work 100%, candlestick patterns work 100% of the times. Usually it is like 60, 70, 80% of the times it works, and remaining things are mostly depend on your other analysis also apart from candlesticks. Okay, so now henceforth we are going to start your indicator trading and indicators and trend identification and all those parts we are going to learn. So if you like the video, subscribe my channel, follow this course until end, and see you in the next part. Take care. Bye bye.